All right, so let's talk more about that and a lot more and what the potential fallout might be for rates and the state of the market and economy. Binky Chadha is Chief Global Strategist at Deutsche Bank, and Peter Bookbar, Chief Investment Officer at One Point BFG Wealth Partners. Peter and Binky, good to see you both on set. First off, very quickly, Binky, have you and your team done anything on the tariffs and what may or may not happen to the stock market if the Supreme Court does rule they're illegal?
I think it would be positive, basically, for equities in the short term, or very short term, I should say. And I would say we're sort of already in that phase. There's going to be a lot of whipsawing because, I mean, if you think about, one part of the companies that are impacted massively by the tariffs, that's the consumer companies. Now, the consumer companies haven't actually recovered from the pandemic yet and the issues that it created. So this is one additional place. So all I'm saying is market was short and underweight. Market got even more short and underweight, basically, because that's where the tariffs hit. And so, when you have the potential of them going away, it's going to cause some whipsawing. So we've had some.
Aren't you worried, though, that bond yields will spike? Because this is going to be a critical source of revenue for the government that would then be cut off?
So I think that bond yields should be closer to 4.5% right now, the 10-year at least, anyway. So I think they're kind of on the low side. And I would say in terms of the tariffs, what we're concerned about is the deficit and the funding. But if you think about the headline tariff number that is raised, to the extent that U.S. companies are paying that, that's 21 percentage points of that is offset by, it's a cost or a tax that's already paid. So, it's sort of subtracts from the corporate tax that you have to pay. So I think that the tariff numbers, are, the contribution to the budget is overstated by just looking at the tariff revenue.
Okay.
That's all
I just wonder, Peter, and I worry, is it an underappreciated risk? And maybe Binky's right. I don't know what's going to happen, and that's the point. We've been talking about this for the better part of a year, and maybe the Supreme Court just comes out in a couple of weeks and says, you know what, they're illegal, bye. And all of a sudden, everything changes.
Well, if a tariff is a tax increase, then the lack of a tariff is going to be a tax cut. So from that perspective, it's going to be a positive. But Trump has plenty of sections that he can utilize to replace a bunch of those tariffs. And they call it the $300 billion of revenue. Well, relative to the $7 trillion that the government spends, it wasn't going to move the needle that much. And because of all the other sections and all the other tariffs that'll probably stay on, the government will still take in money. The offset of that is if the tariffs lead to slower corporate profits, that is less corporate taxes that are paid. Yeah. If it leads to less hiring, that means less income taxes paid. So we can't just look at, okay, we have tariffs, we have revenue coming into the government, and that in isolation. There are plenty of offsets here.
Yeah, and the president will have a backup plan, and some of himself and some of his proxies have said we've got other ideas. I don't know if the tariffs are good or bad. My point is that it's a huge variable that we've been talking about for 10 or 11 months that would soon just be wiped out, all because of the Supreme Court. And by the way, in arguments, apparently they expressed a lot of skepticism, including Chief Justice Roberts, not exactly on board with the tariff idea. So it seems like they will be ruled illegal, but neither of you, Peter, you don't sound that worried about it.
I was not a fan of tariffs, particularly the negative impact on small, medium-sized businesses that have much less ability to handle it. So taking those tariffs off for these businesses, I think would be a positive.
Okay, Binky, we don't have official government data. We know that. Mm-hmm. We do have the Challenger Gray and Christmas job numbers today. They showed the biggest drop, most layoffs in October in 20 years. It's 1 month. It's one data point. It's one company's own data. And ADP, by the way, the other day was actually a little stronger than expected. How are you and your team reading the American economy and job market right now?
I think the job market's been slowing for quite a while. We obviously have all the issues of the actual measurement and the revision, so we don't really know what the numbers were. Lots of reasons to believe that, we slowed a while ago. If anything, some high-frequency indicators, ADP included, are actually saying that we are past the worst and things are actually getting closer to, slightly positive now that we've actually been negative.